Amazing episode of Raising Private Money. I'm Jay Conner, the Private Money Authority, and you're a host of this show. This is the show where we talk about attracting and raising private money without ever having to ask for money. Well, my guest today has got a plethora of experience. He's only raised so far between 250, $300 million in private money. You think he's got something to share on how to attract money? You better believe it. He's got over $250 million in real estate transactions under his belt. And there's all kinds of real estate assets that you can invest in. Well, my guest has identified mobile home parks and parking lots as one of the top real estate investments with what's going on in the current market. Can't wait to talk about those asset classes. And in addition to that, he's got a private equity firm that's called Sunrise Capital Investors. So this is where he makes investments in commercial real estate assets, and he makes it available to passive investors that just want to sit back and collect nice checks to help them build legacy and achieve financial freedom. In just a moment, we're going to dive deep. I'm going to interview my good friend and guest here on the show, Mr. Kevin Bupp, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Oh, my lands, Kevin, for goodness sakes, hundreds of $millions in private money you've raised, hundreds of $millions you've been involved in real estate transactions. This is going to be a phenomenal show. Welcome to the show, Kevin.
Jay, thanks for having me. I'm excited to be here.
I'm excited to have you too. And I tell you what, when I grow up, I want to get a microphone like you. I mean, for all of you that are listening, Kevin is like speaking into the golden mic. I don't know if he's related to Rush Limbaugh or not, that had the golden microphone as well.
Well, you know what it is, Jay? I'm not cool enough to be able to pull off nice bling like you have on your wrist and your fingers. And so this is my bling. This is my gold bling.
Oh, I got you. Well, you see, I wear the bling because it reminds me of when times were good.
Yeah.
Just kidding. So, Kevin, we're going to talk about how you've gone about raising private money. We're going to talk about your Sunrise Capital Investors Fund, where people can actually be passive and get nice rates of return in a conservative way. But my first question, Kevin, you can answer this as quickly as you like, or you can take as much time as you like. And here is the question. Tell me and my audience, who is Kevin Bupp?
Yeah, great question. So, I'm 46 years old as of this recording. I like to joke and say that I've never had a real job. I've been in real estate since the age of 19. That's when I first identified the opportunity, bought my first rental property at the age of 20, and I've been doing it ever since. It's taken many different life cycles throughout the last 20 plus years, but ultimately this has been my bread and butter. I've owned just about every different asset class to speak of, both in the residential world as well as the commercial world. I've owned a number of other companies outside of real estate, but real estate has always been the core focus. And so I started off just like a lot of other folks, buying single family properties. In my early 20s, had successfully built up at that time, what I felt was just like, I thought I was God. I had 122 single family rentals by my mid 20s, was making quite a bit of money, having a lot of fun doing deals, found my way into commercial real estate as well, lost everything in 2008, started back over again. Fast forward a couple years after the crash, started buying mobile home parks, which was a brand new asset class for me. We've scaled that business significantly here over the last decade, and then just in the last 5 years, you mentioned parking lots. That's somewhat of a new vertical for us, but one that we've got about 150 million of parking lots in our current portfolio today. So those are really we like to stay our lane, Jay. We love finding what we're really good at and then just going all in. And so mobile home parks were that again for the last 10 plus years. And then parking, we brought into the fray just about 5 years ago. And that's the only thing we do. Those two asset classes are what we focus in. That's where expertise really shines. And we have a lot of fun doing it as well. So that's a short condensed version of me.
Sure. You said having a lot of fun. I tell you what I believe, and that is life is too short not to be having fun with
Yeah.
what you do. I'm starting to get to the age, Kevin, which you have not as of yet, but I'm starting to get a few people ask me the question, well, Jay, are you thinking about retiring? And I'm going, are you kidding? What in the world would I do with myself? I don't play golf. I don't watch much TV. And so I say you might as well be doing something fun and getting paid a lot of money for it. Now, you,
Right.
like a lot of other people, Kevin, you lost it all, quote unquote, back in '08. '08
Mhm.
was actually '09 was my pivotal moment. But if you had it all over, have you had to do it all over again? What would you have done different? What lessons did you learn from having to go through that? And then thirdly, how do you rebuild a real estate empire after losing it all?
Yeah, all great questions. Back then, the majority of my portfolio that I ended up losing was single family rentals, and it's not a. I mean, it's a great asset class. However, there were some additional factors and variables that existed back then that don't quite exist today. One being everything I owned was here in South Florida, Southwest Florida, to be more specific. So Tampa and then South. You know, the economy here is much more dynamic than it was back in '08, especially once you get outside of Tampa. It was much more it's much more dynamic today than it was 10 plus years ago, or back in '08 when the market crashed. And so essentially what occurred was, number one, there was an excess supply of a surplus of new homes being built. I mean, it was, builders were building homes as fast as they possibly could, but there weren't necessarily bodies coming into those homes. There weren't that much of a population moving here to Florida. And second to that, a lot of the job base was built around construction. So ultimately, when the mortgage market crashed, so did everything else, and there weren't enough bodies to occupy units. It was basically robbing Peter to pay Paul. So we had a major vacancy issue that came about. We were competing against brand new homes that were sitting on the market that builders started renting, and so we had to cut our rental prices. And so we went from having positive cash flow to having negative cash flow. But on top of that, Jay, just to answer your question, but to better answer it, there was a lack of technology back then that I believe exists today that makes even operating individual single family rentals much more efficient than what it was back then. I had properties in 5 counties. I had leasing agents running around. I had maintenance guys running around everywhere. Lots of inefficiencies just in that alone. You couldn't do virtual showings. You had someone showing up at the unit to do walkthroughs and things of that nature. It's just the property management side of it just absolutely was crushing. And so while I argued with my internal self that I truly was a cash flow investor, when you really got down to the honest brass tacks numbers, it was really an appreciation business. And when the appreciation stopped, so did everything else. And then ultimately, when rental rates actually dropped, a lot of people say rental rates don't ever drop, right? They only go up, and that's bullshit. They absolutely took a hiatus for a couple of years, especially in some of the hard hit markets of Florida. And so, I would say, what I've done differently, it took a lot of time and energy. And I was single, I wasn't married, I was having a lot of fun, right? But like, it took so much time and energy to build that initial portfolio one by one by one. And it was fun. I love the hustle, but like, it's kind of how do we rebuild this again? How do we do it more efficiently? And how are we smarter with our time, right? Because now the second time around in '08, I met who is now my wife. We didn't get married till 2010, but I knew that, I knew she was the one, knew we were going to have a family. And now my time needed to be split, right? I need to try to find some type of balance while also rebuilding something from scratch. And so I originally thought it was going to be multifamily. I'd started buying some larger multifamily properties before the crash happened. And I just found a lot more efficiencies in the overall operations that didn't exist in that single family stuff. Debt was also quite a bit more attractive on the larger multifamily properties than that of individual single family properties. And so when I first came out of this thing, it took me about 3 years to really get my head out of my butt. I was dealing with a lot of chaos, a lot of damage control for 3 years, just trying to sort through the mess. But when I came out of it, I had originally decided that multifamily was going to be it. Because I was like, okay, well, it took me this long to buy 122 units, but I had a couple apartment complexes, one that was 70 units, right? Like literally I bought that in one fell swoop. And it took me multiple more years than that to acquire these or, compile these 122 single families. So I thought that was going to be the path. And then I accidentally stumbled my way into a luncheon conversation with a gentleman that happened to be a retired banker that decided to start buying mobile home parks in his retirement years here in Florida. And I had a 2-hour conversation with him, and that changed the trajectory and basically brings us to where we're at today, right? Like I decided not to buy multifamily. I decided to buy mobile home parks. I went and bought the first one, and really the rest is history. And it's been a bumpy ride along the way, but ultimately that's what really made the pivotal moment back then when I was rebuilding. And I wanted to rebuild it again, bigger chunks at a time. So the first mobile home park we bought, now it's still the smallest to this day, was 34 spaces. The largest one single community that we've owned, that we currently own today, that we purchased, is 738 sites, right? I mean, like a multitude of buying single family homes one at a time. There's nothing wrong with that. I just think there's a better way to skin the cat, right? A more efficient way to do it. So,
well, you can definitely scale a whole lot quicker the way you're talking about doing it now. I want us to dive into mobile home parks, but before we do, after all, the name of this show is Raising Private Money. So you've raised a lot of private money, you've raised a lot of capital, and given your experience, what would you share as to what are your favorite methods and ways of raising private money?
yeah, it's a great question, and I will say, I just to give some additional context as to the amount you had mentioned in the beginning. So in the first, I guess the first half of my journey, back when I was buying single family homes, basically leading up into the crash, I didn't know what a formal syndication was. We weren't raising capital in that manner, via securities. It was all. If I did raise private capital, it was a debt structure. I mean, basically bringing a private investor, if whether they had self-directed money or just capital in general, they were going to first lien position, and it was a debt instrument, not an equity instrument. So I just want to add some context there. And I raised a lot of money that way, but I didn't know about the world of syndication. I didn't learn about the world of syndication until probably 2012, 2013. And so that really was a light bulb moment for me. But, I think for me, I don't know if I have one favorite way, Jay. It's been an evolution over time, and for me, I've always been one that wants to kind of, prove the concept before going out and taking money from others, right? I want to risk my own capital, and so even back when we bought the first mobile home park, before I even thought about talking to others about taking their capital, investing in deals, what have you. I wanted to risk my own money. I didn't have much back then. I still had bad credit from the crash. Literally had like $75,000 left to my name that I had to make work. Right, my back was against the wall, and so for me, it was just, number one, find a great opportunity. I think that's one great way to find the capital. Right, get really good at finding good opportunities. And so in that situation, I found a great opportunity. I didn't necessarily need the capital. I had one partner that came in together with me, and we did that deal. But I spoke about that deal quite a bit. Like I was running my podcast back, and I've been doing my podcast for quite some time, but I would go through just kind of the, week by week playbook. I would just give updates. That's what my podcast was not about, that, but I would just share interesting things that took place to me running this community, turning this community around, finding new residents, rehabbing units, running multiple crews, what type of marketing tactics were working to drive residents in and applications in, and just really speaking about what I was doing and kind of the expertise and the success I was having. Ultimately, by default, made folks reach out saying, I really love what you're doing. I don't know if I necessarily have an interest to go do it myself, but I would love to put money with you. And so I think just being transparent and being really good at what you're doing, and ultimately being transparent about talking about it, whether it's at your local real estate networking groups, whether it's on Facebook, Instagram, whether you have a YouTube channel, whether it's on a podcast, wherever you can get your voice one to many, I think, and talk about what it is you're doing, the positive impacts you're making, the great deals that you're doing. I truly think that is, if I just had to pick one blanket way, like that's the way to do it. I mean, we can drill down in a couple areas. Like, for example, today we, in the last couple of years, more specifically, we've started spending quite a bit of money in Facebook advertising. Prior to that, it was all us just talking on the podcast for many, many years about what we're doing, but then not just going wider with our net, but going deeper, having some dedicated investors that have been with us for many, many years and getting into their family ecosystem, right? Into their friends, their family, their aunts, their uncles, their work colleagues, and going deeper into their immediate network. That in and of itself has been a huge game changer. Literally taking the 50 investors that we had and now drilling deeper. And now we've got 150 because ultimately they've been referring us friends, family, colleagues, what have you. So I don't necessarily know if I have just one exact answer for you, Jay, but like for me, it's just being transparent, being open, and having a voice and speaking about it.
I love that, Kevin, and I agree with you. The easiest way to raise the capital without chasing, begging, persuading, selling, or trying to really run people down is what you just said from my experience, and that's sharing what you do. I love, and in my mastermind community, they do it as well. They share on Facebook and their social media and Instagram. Here's a deal I'm doing. Our world is still primarily single family houses, and here's a house I'm doing. And they just share the story. Here's what I bought it for, and here's the rehab that we're doing. And by the way, my investors are loving the, whatever amount of money that they're making. And then our simple call to action on those posts are, want to talk money, DM me. So I'm not openly soliciting. I'm not offering any interest rates. I'm just saying, hey, you want to talk money? Then DM me. Now, there's something I want to drill down on that you just said that I really find fascinating. And that is you're talking about going deeper with your current private lenders or investors and getting them to refer their family and their friends. How do you go about that step by step?
And again, maybe there's a better science to it, but for me, it's just this, steady lines of communication, check in. And this used to be literally, so if you had to look at our company and kind of bifurcate down the middle, it's myself and one other principal within the organization. And years back, originally it was just he and I, right? And if you had to break it down the middle, he ran the finance and the capital raising side. I was mostly on the acquisition and then operation side of the house, kind of running the property management, acquiring deals, and then running the property management. He was responsible for getting the capital in the door. So again, trying to keep it simple. Today, our organization looks quite a bit different than that. But generally speaking, even when it was just Brian, talking to the investors, raising capital. I mean, we've got a CRM system, really simple to put in place, right? Just setting reminders to follow up over the holidays, send gifts over the holidays. Just check in, say hi, how are you doing? What can we be doing better? Yeah, I know that you've given us positive reviews, what have you, but if you could wave your magic wand, change anything, Mr. Investor, like what would it be, right? Just having that open line of communication and treating them like another individual. Because at the end of the day, they're an investor, we're the owner, operator, what have you, but ultimately, I can't do it without you and you can't do it without me. And then we're just two people basically partnering together, doing this deal together. So let's get to know one another a little more. And so again, just having normal conversations. Again, I'm sure that some people have a much more scientific answer than that, Jay, but I'm a pretty simple dude, just pick up the phone and call, say hi, how you doing? And be true about it. Right. Today our world looks a little different. Our investor relations, we have a whole team now. I think we've got at this point, probably 9 different folks on that team. And they manage different aspects of it, but there are 3 dedicated individuals because now we have over 800 active investors, meaning that someone's actually given us capital. Some of those individuals have invested over multiple funds, but we have over 800 active investors inside our multitude of funds that we own and operate. And so that's way more than one person could ever handle. And without a team there, you're always in a reactive state, right? And so we have 3 dedicated basically investor concierges, and all they do is literally proactively follow up with existing investors, check to see how they're doing, check the temperature, see if there's anything we'd be doing better, see if they have any qualms, any complaints, and then take that feedback and actually do something with it, right? Bring it up to the leadership level and make some changes based on whatever feedback was provided. So, but again, I think it's just being a person, man. That's it. Creating friendships, more than anything else. So nowadays, one other thing that we do that we just started doing in the past 2 years is we do investor appreciation events. And we actually allow investors that have not yet invested with us. They might be on our email list. They have not yet invested with us, but we have them come out and we do cocktails. We'll go to different cities throughout the country. A lot of times we'll kind of build it around maybe in a location where we already own an asset or maybe in an area that we're buying something. And then we kind of just make a 2-prong approach, right? Number one, just has some, good good quality time together, breaking bread, talking shop, answering questions, getting to know them on a one-on-one basis, shaking their hands, right, looking them in the eyes, but then also actually going out in the field if we have the opportunity. And actually, I know I just talk about this a lot, guys, but here's actually what we do. Boots on the ground, walking around a property, whether it's something we already own or something that we're buying, talk to them about the business plan, get them excited about it. And just that alone, like just last investor event that we brought, I think we had 98 investors there. Of that 98, there were 30 that were not yet active investors. Some of those were friends of a current investor. Some were family members of a current investor. Some were just folks that were on our list that aren't yet in our ecosystem. But things like that have just really allowed us to just create a compound effect of folks that are now in our ecosystem, that are investing with us, that are active investors and doing deals together on a day-by-day basis.
I love that. I suppose when you put on these events, you just encourage your active investors to invite along,
That's right.
some of your family and friends to come, check out what you're doing and get introduced to that world and
Yep.
see what they might have an interest in.
That's right. No, that's absolutely what we do. Like I said, this last one we did, it was in January, it was an absolute success. Out of that, I think we ended up bringing that. Like I said, there was about 30 or some odd folks that weren't yet investors. They hadn't yet, put capital into our business. And I think we ended up converting about 12 of them. So a third of those that came, they probably already had it in their mind. Like, I'm pretty much ready to invest. I just want to meet these guys in person. I want to ensure that I like them, that there's a good alignment, but ultimately a third, I think, is a pretty good conversion rate.
That's fantastic.
And for them, I think it just took the hump for them was, I got the money. I want to meet these guys in person. See, and I've been listening to so-and-so talking to my ear, and they've been having good success with Invest with Sunrise, but I want to see it for myself, right? I want to get the comfort level and see it for myself. And the only way you accomplish that, Zoom is great, but in person, man, you just, the value that exists with still having an in-person relationship, shaking a hand, breaking bread, spending time to get to know someone on a more personal level, like it's priceless.
There's no replacement for it.
Mm-mm.
There's absolutely no replacement for it. So since we're talking about it, let's talk about the fund. What opportunities, if any, do you have available now for new investors to get involved?
Yeah, no. So we have our current fund, which is SEI Growth and Income Fund 4, and essentially we launched it about a year and a half ago. It will wrap up at the end of this calendar year, and then at that point we'll launch a new fund. So we always have a new opportunity coming out thereafter. But this current fund, it's a mixture of both mobile home parks and parking. At present time, it is a $200 million fund. Of that $200 million, we have deployed about $108 million of that capital over roughly 9 different assets. More than likely, kind of how we're pegging out the years, that we'll probably end up with about 15 assets in that fund, and hopefully we'll make it to that $200 million mark. But even if we don't, we'll have another fund that will roll out thereafter that. But it's a way for folks to get diversified in their investments. Like I said, we've got both parking assets as well as mobile home parks spread throughout the Northeast, Southeast, and some Midwestern states. Targeted returns, in the 16-70% IRR range. If IRR is a metric that you're following, average, annualized returns of roughly 9% over the life cycle of the deal. A minimum investment's $100K. You got to be an accredited investor to get in. But we're very selective with what we buy. We work really hard and long, and we've got some long-term relationships that we've kind of just managed over 6, 7, 8, 9, 10 years with property owners. And that's a majority of what we buy. We're still buying a lot of things from mom and pops, institutional quality deals and larger deals, but still from original families that have owned these for 30, 40, 50 years that we've managed contact with. And as a result of that, a lot of the things that we buy, we're able to buy with a fairly significant margin of safety. We're buying them, below market value, even in a very competitive market. We're buying them below market value, sometimes with really attractive owner financing. It just, offers instant equity for any partners that come in and join the party. So, like I said, this is our 4th fund. Our first 2 funds, we did a full return of capital in less than 3 years. Our 3rd fund, which we wrapped up about 2 years ago, as far as buying, we're working on the return of capital on that one, and this one's it's fairly new. So we're always pursuing new opportunities and new deals, and always looking for folks to come along for the ride.
So what's the best way for people to reach out to Sunrise Capital Investors and get connected?
Yeah, to learn more, you can go to investwithsunrise.com. Again, that's investwithsunrise.com. There you can download the most recent webinar that we posted. Also the PPM, offering documents. You can also see case studies on the existing properties that are inside the existing fund. We've also got a lot of other good information on it. We got some white papers that we've written about both parking investments as well as mobile home parks. We've got case studies on there from other deals that some that we still own today, some that we've gone full cycle on. So you could kind of get a sense of who we are, what our business plan is, see kind of proof in the pudding, of deals that we've gone full cycle. I think we've gone full cycle on 18 mobile home parks now. We're more long-term holders. We like to buy things and hold it for long-term, but we have gone full cycle on 18 deals. So we've got a lot of those case studies on that website as well.
So again, that website is www.investwithsunrise.com. And in addition to that, Kevin, tell everybody about your book, The Cashflow Investor.
Yeah, no, you can see it behind me if you're watching the video here. So I've been doing the podcast now for almost 12 years. Always wanted to write a book. Never found the time to do it. Started writing this book about 5 years ago. Got it about probably about 4 years ago now, but got about 80% done, and then it just fell through the cracks. And ultimately, we finally launched it about a year and a half ago. Wrapped it up, updated it because there was some outdated information in there. But really, what this is, Jay, is I've been at this now for 20 plus years. I've learned a lot. I've had a number of mentors, many folks that are way smarter than I. So I've taken a lot of those lessons, put it in the book. But on top of that, I've now interviewed, I don't know the number. It's well over 1,000. I don't know the total number, but I've interviewed some incredibly brilliant folks on my real estate podcast, folks that have, billion-dollar plus companies, organizations that have built it from scratch. And so I always try to take a gold nugget away from those interviews. And I've basically compiled, my top like 20 or so gold nuggets, integrated it into the book along with my own personal story, how I started, how I lost it, how I rebuilt it. And there's a couple other good tidbits in there as well, but that's really what the book's all about. And it's really about building a business, building a real estate business that truly helps you support whatever lifestyle that you're chasing, right? The cash flow investor. For us, we are about cash flow. Everything that we buy, it's cash flowing day one, and there's still an opportunity to ramp that cash flow up over time. And so we want to be able to buy things that are kicking off money, that we can pay distributions to our investors with, that we can support our own families, our own lifestyles with. And so that's what my game is. Like that's what we've always done. And so again, that book is just my story, but also how someone could take what I've done, the lessons, and then basically implement them themselves and create a cash flow business.
That's wonderful. How can people get the book?
Yeah, so you actually get a free copy of it. I meant to talk to you about this before we started the interview, but kevinbupp.com/free book. Again, kevinbupp.com/free book, and you can download a free copy of the book. It's a physical, it's actually a physical book that will get shipped to you. I think you have to pay, it's $6 or so of shipping and handling, but you can get a physical copy, or you can go to Amazon and spend $20 on it. So either one.
Yeah, same way with me. My book, Where to Get the Money Now, $20 Amazon or free plus shipping. So again, the website to get Kevin's book, who knows, he might even autograph it for you. I don't know. At www.kevinbupp, that's KEVIN, Bupp, BUPP.com/free book. Kevin, what a wonderful treat to have you here on Raising Private Money. Final thoughts before we wrap it up.
Yeah, no, I appreciate you having me on, Jay. It's been a pleasure being here. Just really honored to be a part of the show. Final thoughts is just depending on what stage you're in your journey, whether you're beginning, you're looking to maybe you've done a couple deals, looking to raise a little bit more. Again, I don't have the science, as I mentioned before. It's for me, it's just it should be pretty straightforward. Just talk about what you're doing, talk to as many people as possible. I like to say like one to many, try to find the one to many approach. And that could be a multitude of things, but just get out there. And even if you haven't done your first deal yet, you need to really envision that you're in that deal, that you've done that deal, and you're talking about what it is that you're building, this business that you're building. I can guarantee you that you'll get people excited, you'll get people intrigued, you'll get people interested, and they'll be open to have a conversation. And before you know it, you'll find that person or persons that will be looking to come along for that ride and invest in your opportunities with you.
I love it. Kevin, thank you so much for joining me. God bless you.
Thanks, Jay.
You got it. And there you have it. Another amazing episode of Raising Private Money. And I need your help in order to keep having amazing guests join me here on the show. then we need your help to, you're one conversation away from making a huge impact in another person's life. I need for you to share this episode with just one other person that you think would really get a lot out of this show. Be sure and share. Also, if you happen to be watching on YouTube, be sure and subscribe and click that bell so you don't miss out on the upcoming episodes. I'm Jay Conner. Look forward to seeing you right here on the next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/money guide. That's JCONNER.com/money guide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/money guide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.